Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now over the last couple weeks I've been releasing a series of videos about small cap Canadian companies in the MJ space, and I've been getting a ton of positive feedback. So today we're going to be taking a look at another one of these companies called WeedMD. I currently hold this company in a few different portfolios, and I'm really excited about its market cap and share price at current levels. Before we get into the video, please take a second to like and subscribe to the channel if you haven't already, and leave a comment below if you're currently holding any other companies in the MJ space that you want me to talk about. Without further ado, let's jump in and talk about WeedMD. Okay guys, so today as promised, we're going to be talking about another small cap Canadian company that operates in the MJ space. So this one's actually called WeedMD. This is one that I've held for a couple of years now, and I wanted to really talk to you guys about this company because they've had a series of pretty big news announcements as of the last couple of weeks. They're also due to have year-end earnings coming up right away, so I thought this was a good opportunity to take a look at this company. I feel like this one is extremely undervalued when you look at their market cap compared to some of the things they have coming down the pipe and even their current revenues. So I wanted to walk through this and hopefully open you guys' eyes to a potential way to play this MJ market and this upcoming US legalization. So if we take a look at a 1 month chart here, you can see they were trading in the 30s for quite some time, and they've actually had a massive run up here over the last couple of weeks. So they ran all the way up to just about $1 here, 94 cents, and you can see they've now actually pulled back under 60 cents. So I think it's a good buying opportunity in this kind of 50 to 60 cent range. We'll talk about why, but I definitely feel fair value on this company is closer to 85 cents a dollar at this point, and I think there is a lot of room to run up into the $2, $3, $4 range. Now if we look over at a 6 month, you can see here they've been downtrending for quite some time, and they were really kind of range trading in those high 20s to low 30s. Now if you pull out to a 5 year, you can see this stock was actually up above $2. This is when legalization actually took place in Canada. There was a lot of hype behind these names. This one was traditionally a grower, and we'll talk about my thoughts on that in a little bit here. But you can see over the last couple of years, it's continued to downtrend, and it's gotten to a point where I feel like the value proposition on this is absolutely great. Now, the final thing I wanted to point out here is just market cap. So you can see we're sitting at 122 million. Now, when you compare that to some of the big players like Afria and Canopy that are 10 billion plus, and then you start to look at the revenue and the business model that WeedMD has, you can really start to see that there's a lot of upside in this type of name, and it's really a smaller producer that I think has kind of gotten pushed to the wayside and forgotten. Now if you scroll down here, you can see annual revenue for 2019 was just under $21 million. So revenue represents about a sixth of their market cap right now. Now if you quickly compare that to one of the big players like Canopy, you can see their market cap is about 18 billion, and they generated about 400 million in revenue last year. So they're trading about 48 times revenue compared to WeedMD, which is trading at about 6. And that's really why I'm so bullish on this company at this point. I feel like the share price has been so disrespected that it's an absolute steal right now. So in terms of what WeedMD actually does, as I mentioned, they started out as a grower, and that was their initial kind of entrance into the MJ space. And at that point, I wasn't overly excited about them. To be honest, I feel like growers, very similar to farmers in the agricultural industry, these are the players that are under the most competitive pressure. There's the lowest barriers to entry. And realistically, what we've seen in Canada here is there's so many entrants into this space that it really drove down the price and the profit margins, and these companies were really struggling. So what WeedMD did was they took a step back and they actually branched out into some other areas. So we're going to talk about kind of their different divisions here, but they have their medical market, which operates under Starseed. They've then got Color Cannabis, which is their adult use recreational brand, and then they have CX Industries, which is actually processing, extraction, and production. So they have diversified away from just that grower or producer kind of mindset, and I think this is really what's going to allow them to maximize revenues and profits moving into cannabis 2.0 and 3.0 in the near future here. So we're going to talk about each one of these divisions in a little bit more detail, but the key here is that they've got a few different pronged approach to this market. And before we get into the three specific divisions, I wanted to show you guys kind of their overall operations here. So they're based out of Ontario, Canada. They have a Strathroy cultivation hub, so this is where all the growing growing takes place. And as you can see here, it's over 220,000 square feet. So this is an absolute massive facility. Now they also have the opportunity to double the cultivation footprint at this site. There's enough space for them to actually move up over that 400,000 square foot production facility. And you can see here that the greenhouses allow them to really control the environment of these plants and really produce a consistent high quality product, which we'll see in their color branded portfolio. Now the other thing that's really cool here about WeedMD, and this is one of the few operators that I think is successfully executing this type of strategy, is they've actually launched outdoor cultivation as well. They've successfully harvested 2 outdoor grows, and the quality of the product that they're getting from outdoor compared to the cost or the cost of inputs to grow is absolutely crazy. And we're going to talk about this in a little bit more detail, but they're actually able to produce MJ in an outdoor setting for tens of cents per gram compared to indoor, which is much more expensive at $2, $3, $4 among many of the big LPs. You can see here they successfully planted on 27 acres, so it's a massive operation, and they have the ability to scale this one up to 100 total acres at this same site. So in terms of ramp up opportunity, it's definitely there to go up almost 4 times what they're doing over the last 2 seasons. Now these 2 photos are of their Almer processing facility, so this is more the CX industry, but you can see here they have 50,000 kilogram per year capacity for CO2 extraction, which is great. It's a 26,000 square foot facility, and then they also have the production facilities on site. You'll see as we talk about some of the more recent news events where this has really been leveraged, but I think this is great that they can do everything in-house, and they've got that end-to-end ability all the way from seed to production and ultimately bottling and distribution as well. Now this is just a photo of one of the outdoor crops, so you can see here this is one of their harvests as of the most recent summer, and I wanted to throw this in so you can just see the quality of the plants and how big they're actually able to get at an outdoor scale. Some of these plants are growing 5-6 feet tall, so obviously when you have plants that big, the amount of MJ that you can get off each plant goes up exponentially, and that's what really brings those costs for outdoor down. So if we now take a step into each of the 3 divisions, we're going to start with Starseed, which is medical, and I think they've made a really smart play here, and we're going to talk about their involvement with the LIUNA pension plan or fund, but I wanted to show this slide just to show the markups and the MSRP on medical MJ compared to traditional or adult use recreational. Now the key with medical MJ is this channel was actually the pioneer here, so this is where a lot of MJ, and even in the States and other countries, you can see it's approved for medical use first, but a lot of companies really overlook this channel because it's hard to build successfully and it's hard to get those relationships going. So if you can do this successfully and work directly with the insurance companies, you really have access to a captive market that you can charge more for because it's not the end user actually paying those prices, it's the insurance companies themselves. So you can see here with the adult use, the licensed producer takes just over half of gross revenue, but the retailer and the provincial distributor also get their cut. Now if you look at the way traditional medical distribution was set up, the clinics would actually take their cut in addition to the LPs. So what Starseed has done is they've actually worked directly with the insurance companies to create a closed loop direct to consumer medical sales model where they're allowed to capture all of that revenue and actually charge more per gram than they could in the traditional medical market. Now this has been a little bit slow to ramp up. We'll talk about their overall user base in a little bit, but I think once they're able to really scale this, they're going to have tremendous potential that a lot of companies really don't have access to. Now what's allowed WeedMD to really step into this medical space and I think take advantage of this vertical in a way that a lot of companies have overlooked is they've actually partnered with LIUNA pension plan. Now this pension plan actually represents hundreds of thousands of individuals across North America. So how this originally came about was the pension plan actually provided a revolving line of credit for WeedMD, and as this relationship continued to develop, LIUNA actually bought in for a $25 million equity stake. And you'll see here on the next slide, they actually own 29% stake in the company themselves. Now, if you combine that with the inside ownership, 33% or a third of WeedMD is actually owned by insiders, which really reduces that free share count on the market. And this ultimately, once this company does start getting attention, is really going to allow the share price to vault up at a fast pace because there's fewer shares available for people to buy. The other thing that's so great about this is because the pension fund has this invested interest, they really want to ensure that they're diverting all of their employees and all the people that they represent to WeedMD exclusively. And once once those bonds and relationships are built, it's very hard for other LPs to break into that market, and it really becomes a captive audience for WeedMD. So here's a little bit of information on LIUNA pension plan itself. So you can see here they represent over 350,000 employees or lives, and this could be their families, spouses, kids, stuff like that as well. Now below here you can see all the different unions that LIUNA represents. So there's 5 different locals here. They've actually added a 6th just recently. There's the insulators, and then there's the International Union of Painters and Allied Trades. So a lot of this is trades workers, and not that certain demographics maybe use or don't use MJ more than others, but I know from personal experience, a lot of my friends that are in the trades definitely enjoy MJ, and I think this is a great opportunity for this company to focus on a segment of the market that can really find value in these products. They also have partnerships with 3 other private unions that are undisclosed. You can see here they also have third-party distribution agreements with Shoppers, which is like a CVS or Walgreens here in Canada, and 40 other independent cannabis outlets or retailers. So this slide here actually talks about the growth rate in this medical segment, which is what I mentioned a few slides ago. So you can see here they're up 45% on a quarterly growth basis, and it did have quite a slow start. So this is in thousands. So you can see here in Q1 of 2019, the market was sitting at about $1 million. Then it moved up to about 2 million, 2.5. By the end of 2019, they were sitting over $3 million. And now in Q1 of 2020, this has actually jumped exponentially up over 5 million. So it definitely is a smaller amount of revenue at this point, but I think the importance here is that they're laying this groundwork and this foundation and building these relationships. And once they really push the gas here, this is going to blow up exponentially, and the amount of revenue that they're able to generate and maintain on a consistent basis through this channel is going to be awesome. You can see here this is the highest lifetime value medical clients, driven by high use, attractive pricing power, and low turnover. So again, once these relationships and habits are built by these consumers, it's very hard for them to branch out or move to other providers if it's all set up direct billed through their insurance provider. So shifting gears here a little bit, now we're going to go over to their adult use or recreational division, and this is actually branded as Color Cannabis. So this is, I think, very good branding. It really stands out. If you go into an MJ store, this one definitely catches your eye. And a lot of these strains, specifically the Pedro's Sweet Sativa, the Mango Haze, and the Ghost Train Haze, are extremely high grade cannabis, and they've received very high recommendation in the MJ community. So these are definitely strains or brands that people are aware of and actually go out of their way to purchase. Now when WeedMD launched Color Cannabis, initially they just sold the flower, and it was in very small amounts, I believe 3.5 gram containers, and it really limited the amount of volume that they could push. So what they've done recently here, if we jump over to the Color Cannabis website, is you can see they've actually now started expanding into vape cartridges that are compatible with any 510 battery, which is kind of the standard in this industry. And then they've also launched pre-rolls. So these come in at 0.35 grams per, and they're actually sold in 2 single session sizes. So you get a 2-pack essentially. You can also see they still do sell the flower, but they actually sell it now in these nitrogen infused bags, and they've actually upped the amount per serving as well. So they're not just doing that 3.5 gram container anymore, which allows them to push more volume and ultimately more revenue. Now for those of you who aren't familiar with MJ, or maybe don't partake yourself, a lot of people think it's just kind of a consistent one size fits all. And what Color's trying to do is really brand it as a curated, individualized product, similar to like a high quality coffee or craft beer or something like that. So you can see here all the different terpenes. This is actually the flavor profile of the MJ itself. So in addition to various THC and CBD contents, these are actually what gives each individual strain its unique flavor, aroma, and experience. Now, very similar to wine or craft beer, like I mentioned, each strain has different aromas. So they describe this one as earthy, sweet, citrus, whereas maybe this one is described as tropical, fruity, mango. And that's what allows users to really hone in and find a few strains that they like and keep going back for that consistent experience. And WeedMD has actually found a way to make that experience consistent even with their outdoor harvests. And that's what a lot of these LPs have been unable to do, is indoor controlled environment, it's a lot easier to get that consistency, but the outdoor mass scale is very difficult for a lot of people to master, and that's what WeedMD and Color Cannabis have really been able to do successfully over the last 2 seasons and can now leverage that knowledge and experience moving forward. So the last of the 3 divisions I wanted to spend some time on here is CX Industries. So we talked about some of the numbers, but what they've now been able to do is really complete that end-to-end product cycle, and they can actually now take their product or their harvest directly from the fields, process everything in-house, and really step into that value-added side of the business or the vertical that delivers end product or finished products to the end customer. And one great example of this that just launched recently is Mary's Medicinals. So if we jump over to the news release here, you can see that they just recently, as of February 16th, released Mary's Medicinal Topicals in Canada. So topicals are actually creams or over-the-skin application. And as you can imagine, for insurance companies and stuff like this, it really lines up great with that medical use segment for things like joint pain, muscle pain, and arthritis. So you can see here, expected availability to Starseed medical patients in late February, and exclusive agreement to produce and distribute Mary's Medicinal products in Canada. So what MD has now allowed themselves to do is they can process this stuff in-house via their CX Industries. They can then leverage their partnership with LIUNA and these pension plans to actually access a captive market through their Starseed brand, and they can feed all of this stuff with their actual input or harvest at their grow sites. So really, they don't need any outside involvement at this point. And I think this is what's so exciting about this company is they've now finally got the infrastructure and all the different key players in place to really leverage the different divisions, value adds, and areas of their company to maximize revenue. So now that we kind of understand how WeedMD operates and their different divisions, I did want to take a look at their most recent Q3 financial results. So this came out late November. We expect Q4 and year-end results right away here, but I think this is important to really highlight some of the points that we talked about. So overall net revenue was up 8% quarter over quarter, which is okay, but what I really get excited about here is the amount of kilograms sold in adult use channel was up 24% over the prior quarter. And this is really to do with those variants of Color Cannabis and the different forms of delivery like the pre-rolls, the vapes, and those larger volume packages that weren't available in prior quarters. And I think this is really what the market was asking for. They want variety and they want volume. And Color Cannabis has now answered on both fronts. So I expect this adult use recreational number to continue to grow at this type of a pace for the foreseeable future. Now the final point on this slide that I wanted to draw your attention to is the weighted average cost per gram. So this is kind of a standard metric in this industry. And you can see here it came in at $2.11 per gram in Q3 compared to $2.52 in Q2. So that's almost a 40-cent improvement quarter over quarter, which is phenomenal. And when you look at some of the other LPs, even the $2.52 is well below their average cost per gram. And this is a direct byproduct of the efficiency and scale that WeedMD has in terms of indoor cultivation and their massive outdoor harvest. So I think this is a trend that's going to continue to go down for this company, and they're really going to be able to maximize and reduce that average cost per gram as they ramp up and scale production at their Strathroy facility. Now, the final thing I wanted to point out here before we get into my own personal holdings is just a recent bought deal. So I mentioned a number of big news releases coming out recently. Mary's Medicinal was one of those. This was the other one. So they actually announced a $15 million bought deal, which was underwritten by Canaccord Genuity and 8 Capital. That's now been increased to $17.5 million. So what they did here was actually sell just over 21 million units or shares. So it did dilute the overall share count. However, they did this at an average price of 82 cents. And if you look at the timeline here, this was about 10 days ago. So at the very start of February. So when this was announced, WeedMD was actually trading above 82 cents. You can see here it was up close to 90 cents. Once this bought deal was announced, that's what actually caused the share price to drop like this. But what I think is so interesting about this is if these big investors are willing to pay 82 cents a share, in my mind, that's kind of considered fair market value for this company, or maybe slightly even discounted because they're buying in such volume. You can see here they also got warrants at an exercise price of $1. So if you're thinking about it, if I'm the guy at Canaccord Genuity or 8 Capital, I obviously think the WeedMD share price is going to go over $1, which makes these warrants valuable to me. Now, if you consider they're trading at 58 cents right now, or 58% of those warrant exercise prices, I think this is a great deal or a great discount, and you're actually getting it cheaper than some of these big institutional investors only 10 days ago. Now, diluting the share count isn't obviously great, but the nice thing about this is they did generate over $17.5 million. So you do get that flexibility in terms of cash, and they can then use this cash to help execute and grow these different channels or divisions that we just talked about previously. The other thing I'll mention about these warrants is in order for them to be exercised, the shares need to trade for 10 consecutive days equal to or above $1.64 a share. Now, these warrants are good for a 24-month period. So this essentially means that these big investment groups think that within the next 2 years, WeedMD will be trading above $1.64 for some sustained period of time. So realistically, you're able to now get this company for a third of that, which means a potential upside of over $1 per share within the next 24 months if the company is able to execute and actually come through on what some of these investors think could happen here. So as promised, to close out the video, I did want to share with you guys my current position in WeedMD. So as mentioned, I've been following this company for quite some time, and I did get into it a couple years ago and pay definitely more than I should have at that point in time. So I actually got in for 1,000 shares at $1.30 average, and you can see at a 58-cent price here, I'm actually down about 55% on this position. So this one's down about $800, which is not the end of the world, but definitely goes to show how important timing is when you're moving into companies that are speculative like this in a high growth industry. But what's interesting here is if you take a look at my other account, you can see that I was actually able to follow this company along and get in almost right at the bottom. So because of my understanding of this industry and this company and my core belief in their overall business model, I was able to track this company over the past couple years and actually jump in for 5,500 shares at an average price of 30 cents. So now with their current share price of 58 cents, I'm actually up 93% on this position, or over $1,500. So I was able to offset my original loss, and I'm now actually up about $700 on my position overall. And I think there's a real chance of this company going $2 plus in the next 24 months, essentially quadrupling the value of this position or taking it to about a $15,000 position in my two accounts combined. So that's it for today's video, you guys. As mentioned in previous videos, I'm very bullish on the MJ industry. I think once federal legalization in the States comes around, it's going to really be a rising tide lifts all ships type of scenario. I definitely think you need to pick your places here. A lot of the big names have been hyped up, and I think definitely have a premium built into their price. But when you look at some of the smaller guys like this, like the WeedMD, Valens, Tilt, stuff like that, I think there's really some value to be found. And I think ultimately these are going to be the ones that see that exponential share price growth. So hopefully this video has given you some good information about WeedMD's business model, maybe opened your eyes to a company that you weren't aware of previously. As always, please take a second to like the video, subscribe to the channel if you haven't already, and have a great rest of your day.